Mark Gulley is an industrial analyst from Soleil Securities, and he joins us live now from New York. Mark, thank you and welcome to the show. Just real quick, What is the initial reaction from institutional investors in terms of what to do with the potash shares?
Well, certainly they've bid the stock up for 2 straight sessions. As you point out, the stock is trading well above the initial bid coming out of BHP. As you point out, I raised my price target to 160, and that is based on the replacement cost of potash's assets.
Earlier in the package, we saw that there were some concerns possibly that, well, would BHP possibly overpay? At what price would you say it would be overpaying for the company Potash? I mean, certainly there's been a lot of discussion on its value, but how does it fit in terms of the BHP, I guess, business plan?
Well, certainly BHP is a diversified minerals producer on a global scale, with interests, as you point out, in iron ore, coal, diamonds, and that sort of thing. And they have an initial position, as you point out, in potash. By buying Potash Corp, they would vault to a leadership position, inheriting the 20% capacity share that potash has. And I think what they're looking to is, as they point out, adding to Tier 1 assets, a low-cost producer, selling to export markets into what they view as a growth market. So I guess they say sometimes you pay up for beachfront property.
If I'm a potash shareholder at this point, are you waiting for a higher bid? Are you perhaps maybe looking for another suitor, maybe, because there's been so much media surrounding this particular story and merger that I'm sure there's other folks also looking at potash as well?
Well, I guess, yes, we see a potential for higher bids from 2 sources. The primary one, of course, would be BHP itself. And secondarily, I suppose you can think about other large global miners like Rio Tinto. It appears as if Vale, the third potential bidder, may have ruled itself out. It appears that Vale, though the Brazilian equivalent of, let's say, a BHP, is very much focused on its own continent when it comes to fertilizers. They are in the process of developing a large phosphate rock mine in Peru, and they have talked a lot about building their own greenfields potash mine in Argentina. So I see a potential for higher bids coming from either BHP itself or perhaps a Rio Tinto.
Okay, let's talk about the fertilizer industry as a whole. I mean, certainly this has been a big story, but are there other fertilizer companies or related companies that you see that could possibly be on the radar of other companies?
Sure. I think the other one that probably comes to mind the most would be Mosaic. Mosaic is a smaller version of Potash Corp, smaller in terms of potash, but larger in terms of phosphates. Now, Mosaic is 2/3 owned by Cargill, the large, very private grain trader based in Minneapolis. And it's kind of a binary outcome. Since they own 2/3 of Mosaic shares, if they elect to want to unload that stake, they could do so. And certainly a Rio Tinto could be viewed as a potential bidder for that particular property.
Mark, given where rates are right now and the cost of borrowing, which is essentially near zero, do you anticipate or are hearing more and more discussions about possible more M&A activity in the United States and globally?
Well, you raise a great point. We made a point in a report this morning that what BHP is doing is actually very simple. You have the price of grains, which is rising, and you have the price of money, which is falling, i.e. low interest rates. So how do you lock in that spread? Well, you make a large strategic investment in a company like Potash Corp. So higher grain prices, lower interest rates, adds up to the potential for perhaps a more accretive acquisition than the work that you cited earlier.
All right, great stuff. Mark Gulley, industrial analyst at Soleil Securities. Thank you very much for joining us.